Hi, welcome to the Market Alert for Tuesday the 12th of January 2016. Starting off in the 5-minute chart, just to show you what setup we've got here. I've actually got the hide indicators outside primary trade times unchecked there at the moment, and the reason for that wasn't so much in the pre-market session, which was fine throughout the earlier part of the morning, which I mentioned yesterday, and then of course it goes quiet waiting for the US market to open. But in the afternoon, in the first part of the session, which I've mentioned many times in the Market Alert and we'll do again here, if you don't get a signal in the first part of the trading session, then have a look at what is normally deemed the quiet part of the session, see if there's any signals there. Again, it's not the number of signals that's important in trading, it's the quality. And like I said yesterday, I'd rather have no trades than losing trades. And again, so the volatility is great in the first part of the session, big bars, 30, 40 per point ranges. In fact, this one's a 60-point range. And therefore, give the market a chance to settle down a bit, reduces the risk. And then we have a sell signal here of around 70 points down to the psychological level of 16,250. And then we have a buy back up here of around 44 points with a trailing stop as the market drove through the psychological levels there. And then we see the plunge protection team coming in just before the close, doing their stuff, moving the market back up 150 points and then stopping at the 16,450 level there, the blue line. And then on the overnight market, we've seen the market come all the way back. It's a fool's parody, all of this nonsense with the plunge protection team, the same as it was for China from August to November, pumping trillions of RMB into the market, only to see it all falling apart. And again, as I've said before, they are wasting their money. It's taxpayers' money, and all they're doing is giving grief, financial grief, to generations to come. Let the market collapse, let it find its own level, and let's have the free market back and not the central bank-owned markets that we've had for the last 7 years. So here we've got a situation where the markets pull back. And if we have a look on the daily chart, you can see yesterday the market finding a bit of support, but this downside market is not over by a long shot. Let's just have a quick look at the news for today. What have we got? Anything out at 3 p.m? We've got the jobs opening, and Barmy Carney is going to be speaking at 2:15. Whatever he says, just ignore, because nobody's taken any notice of him since he came into the job a few years ago. And also Fisher's speaking, which is ironic given that he admitted in an article at the weekend that the Fed actually had rigged the market. So he's going to be speaking at 10:30 a.m. for the US there. Manufacturing production for the UK as well show a slight increase apparently. So that's that, and here's some encouragement for you. Fasten your seatbelts. UBS warns of record spikes in volatility if this level breaks. The levels they're talking about is what I've been talking about for weeks in the Market Alert, and that's to do with the August lows in the Dow Jones. We just go back one there, and also in the S&P monthly chart. There you can see the credit risk high yield bond numbers there as well. We really are on the cusp of something major if the August lows are taken out, and the same with the 3,000 level in the Shanghai as well. That on the overnight markets is up slightly. It was 33. This is dropping as I've been recording. It was 30.33 when I started, and it's only a few minutes ago. This is sideways at the moment. Yesterday, if you're not aware of it, we've got another low in commodity prices, and that's because crude oil fell out of bed yesterday, taking out the August lows as well. The 2008 lows, not the August lows. Just obsessed with that August low to be taken out. So there we've got 40 plus year now lows in commodity prices across the board, and even more importantly, if you're not aware of this, let's get rid of that, click in the right place. The Baltic Dry Index also putting in a new low yesterday. This means that the shipping of goods globally is declining massively. This time last year, we've got December of last year, you can see that we were at the highs of 2330, and now yesterday's low is 415. So you can see a dramatic drop in the Baltic dry index and the shipping of goods. And there was a brilliant article about this yesterday showing it on maps inside of Zero Hedge as well. If you want to have a look at that article, very interesting. And yeah, it's not a pretty picture. And if we get the August lows taken out, then we can expect the volatility to increase as well. And then finally, in the implied volatility, dropping slightly yesterday because obviously the market was in a narrow range, which is good. The market needs to breathe a bit before it can move higher, down to 1983. And then again, you can see that reflected in the chart there. So yeah, good day yesterday. Just the right amount of volatility after the first hour or so of the whipsaw activity that we did see in the market. So settling down a bit, and possibly the same again today. Depends what Fisher's got to say, and Carney as well. Right, that's it from me. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support. See you in the next one.